Hello everyone, I'm Dr. Stock, and in this video we're going to take a look at the markets. We're going to see how we've done this week so far, where we think that market could finish up on Friday. It's been a great week for us. It's been a pretty strong rally, especially given all the banking news that we've had that has been trying to drag on the markets, the economic reports that have been pushing up the markets. It puts us in a really interesting situation. I want to take a look at the markets, a little bit of technical analysis at the SPY and at the Qs, see where that's going. And then I also want to take a look at the federal funds rate coming up because we have the FOMC meeting coming up next week. Where does the Fed Watch tool currently have us positioned? All that is what I want to discuss in this video. Real quick, before I get to the content, down in the description, find this link that I have for Moomoo through my channel. It's an easy way to support my channel. And the best part is you're supporting yourself by doing it. This is at absolutely no cost to you. You sign up, open up the account. Here it is. By depositing $100 or more, you get 7 free stocks. That's 2 AI draws, followed by 5 other free stocks valued up to $2,000. For a deposit of $1,000 or more, you get 17 free stocks. 2 AI draws still. The other 15 stocks that you get are still valued up to $2,000. So thank you for the support and thank yourself for supporting yourself. Last thing, down in the description, find that link for the Patreon if you want to hear more of my commentary and see more of my Patreon exclusive content and be a member of my community. That link is also found down in the description. With that said, let's move right on to our technical analysis that we have for the SPY, for the Qs. Where the heck are we going to end this week? And what does the Fed Watch tool tell us about the possible rate hike that we get next week? All right, it's time to peruse the Qs. So right here we got Q, which tracks the Nasdaq 100. And well, this is a pretty zoomed out view, and I think it's important to look at this orange line coming across your screen right now because that's the closing price for the Qs as of today's market, which came in at about 306, almost 307. And you can see the little bit of area where we have support over here tracked across, almost at the resist, almost at resist, almost at resist right there. So horizontal lines are what I use very often when I look at areas of resistance or support. So let's slap a horizontal line. There's one that I think is really critical to pay attention to, and that, my friends, is right around the $313 mark, so especially across these recent peaks that we have, and that is a very critical mark. If we retest that value and fail to break it, then we could possibly have a double top resist given this most previous area of resistance that we have here where the prices came back down, and that could cause us to drop through these previous lows that we've seen. Now let's zoom in to see the more recent price action that we have. So taking a look at the week, where we came from, and then we'll come back to support and resistance. Let me grab this tool right here. This is Moomoo, by the way, and I'm using the desktop version of it. And if I go to the close from Friday of last week and then track it to the close from today, this says there are about 6.5% up from where we ended the week last week. That is an incredible climb for the Nasdaq. In my newsletter available over at my Patreon, last week I put it out on Friday, March the 10th, that I was bullish on this week. I gave my reasons for it through my Patreon exclusives, talked about it in my Discord with my community members that are over there. And well, so far it's really panned out despite the fact that we had a few scares along the way. And you know, while I'm not always going to be right, it is nice to have this sentiment out there to see it filled out. And well, that worked out well for us. I'm going to take that away from us. There we go. And I want to look at another line here. This horizontal line right here at about 309. We have room for about 1% up, and then we get to a minor area of resistance. I think the more important one that we have is right up here at 313, which gives us about 2% more to go. Now that would be a very strong Friday for us, and we've had a very good run of it today, going up over 6% in a week. Even given that fall that we've had, it's been a good week already. It'd be very understandable if it did settle back down a little bit, maybe back down to 304, so that'd be under 1% that we would come back down to support. So it could be a good Friday for us, especially if consumer sentiment comes out well. And of course, we got to keep an eye on the banking news that we have. That is something that is just going to continue to cause further volatility in the markets. I think sooner that news would be bad than good from where we sit right now. Right now, I think we're at a decent area of stability in the near term with the news from banks. However, more comes out all the time. And if we hear about more banks becoming possibly insolvent, well, then that's going to be bad news for the markets, especially if it ends up being some of the bigger banks that are out there. Some of the positive news that we got today, the bigger banks bailing out First Republic. That is a good news. At least it builds confidence that the big banks are secure for now, although there are still issues that we could possibly see surfacing over time, and we should keep an ear to the ground for any rumblings from that. So banking news aside, we could still have a decent finish to the week. Maybe we see a little bit of softness coming down on Friday, still finishing up green for the week, strongly from where we closed out the last one. Again, light of that banking news could change that. We also do have room to drift up just a little bit more, about 1% more, to close out the week. So if I had to say in the bullish direction, probably around that 309 level, so maybe another percent in the Qs that we would see here. I don't think that we make it up to 313, at least this week. It is possible leading up to the FOMC meeting that we see that. And that could be a very, very super interesting time, because if we get news coming out from the Summary of Economic Projections, or we get a rate hike that we don't expect, any sort of surprises that are negative surprises, or anything that we get from banking news, if we reach that double peak, that could be, from a technical perspective, not very good for us at all. And that could smack us right back down. If we fail to break this previous high, then we don't stay on that bullish trajectory that we're on. One other thing I wanted to point out before we move on from the Qs, let me get rid of those horizontal lines. And I want to bring out just a quick little line segment off this peak that we have here, because as of today, we get this little trend line going on here. This could also be showing us a little bit weaker resistance that we have. I don't think it's as strong as the horizontal resists that we've had. So maybe about there. It is possible that we fail to break that, or that we even break through it a little bit. Like I said, grab about 1% off of it before dropping back down, showing a little bit more softness next week, especially leading up to the FOMC meeting. I will tomorrow put out a video about what I think is going to happen with the market during the following week. I'll have my newsletter out over at my Patreon, so if you want to check it out, you can do that. That link is down in the description. Let's move over to the SPY. Boom. All right. So I already have some drawings on here, and you can see the drawing that I have across the bottom. This is the area of support that we've had as a diagonal line, and it was working pretty well for us up until this day right here. Let me see, that's 3.7, and then this was the worst one. This is where the SVB news started really coming out on that Thursday. It really hit the markets, followed by Friday, and we had some pretty significant drops. Now, I'll get to those areas of support and resist that I have drawn for you in just a moment. I just want to put this on here. So this is the close from last week to the open, or to the close today. And the SPY is actually putting up about 2.5%. So not as good as we saw in the Nasdaq, in the Qs, but still bullish, still good. And well, you can see the areas that I have on here now about these lines that I have drawn on. From today's close, which is at 396, this horizontal line is 400. That's equivalent to about 4,000 in the S&P. I don't see us breaking through that, even though it's 1% up from where we're at now. I think that is, unless we get incredible news, like incredible news in the for banking, consumer sentiment, you name it. I think the stars would have to align to push us up over that value. As a matter of fact, not only do we have that horizontal line, but we also have this diagonal line that was support for us, but since we broke through it, now it's resistance, which is still pretty darn close to that 4,000, that 400 line in the SPY. And then don't forget about this wiggly little blue line that we have through here. This is the 50-day simple moving average. That is something that could also, we have triple threat resist going on right now. We would have to have an incredibly strong day in the markets. We would have to be moving on some really good news, on really good volume in order to break us through that. I don't think that we see more than 1% tomorrow, barring like very strong positive news. There's just too much resistance going on at that area, and I think it's going to stop us out. I think we might come up and hit it and then maybe experience a little bit of softness coming off of it. So possibly back down to where we closed today. Honestly, we're just going to have to wait and see. Consumer sentiment, it could honestly be up a little bit. As a matter of fact, I think consensus has consumer sentiment up a little bit for tomorrow. So we're going to have to see. I don't expect any big changes in consumer sentiment from February. I think when April's consumer sentiment comes out, that's going to have a lot more to say about the state of the economy, especially giving, like, if we keep on getting news about the banking system, that can be very, very much trouble for us. And we'll have to see not only what we see from the bank news, but also from the Fed, from the Summary of Economic Projections that can also impact us. So let me clean up the things that I'm saying. We have room for about 1% up to about 400 in the SPY. Downward, we could come back to this 50. That'd be 1.5% down from where we're at right now. Fairly volatile, but I think in light of no real big bad news, I think probably a little bit less than that, maybe down to this low that we have here. So maybe 1% either way in the SPY for Friday. So 1% up is what I think is going to happen. Maybe pulling back a little bit from that, maybe peekabooing over a little bit, but about 1%. And I think it's going to be up. So the CME Fed Watch tool, 25 basis point, 80% chance. A pause, 20% chance. They got to be careful with that pause, because if they make any indication of doubt in the banking system and cause further bank runs, that could be terrible for banks, the economy, the market, you name it. So if they are going to pause, they got to be really careful about how they phrase it. If they do 25 basis points, they got to be really worried about the banks themselves. So this is going to be a tricky one. 80% chance for that 25 BP hike. We're going to have to watch and see how that goes. And let's just look at it December real quick, just to see where they're saying right now, as of the as per the FedWatch tool, 425 to 450 for basis points by the end of that. So that will actually be cutting still throughout 2023. Not quite as soft as yesterday. Yesterday, after the market closed, this was down to 375 to 400. So it is good to see that move. So we are seeing movements in that federal funds rate by the end of 2023. This is going to keep changing daily with the markets. So we'll see what March does, and then we'll plan from there. Honestly, I wouldn't be surprised if they paused in March or very soon thereafter. Certainly by June, I just don't think that they have 25 basis points to do 3 consecutive times in a row. So if they did it in March, I'd be very surprised for May, very, very surprised to see it happen in June. And I think just by July that it would be unreasonable given the current economic circumstances we find ourselves in. So that's what I have for you guys today. I hope that you enjoyed my commentary. If you did and you would like to hear more, check out the link down in the description for the Patreon. Click, sign up, get access to my Patreon exclusive content, and be a member over my private Discord community. Also, while you're looking around down in the description, find that link for Moomoo, sign up, deposit your cash, get your free stocks. Thank yourself for the support, and I thank you for the support. All the support you show, even if it's just watching this video all the way through. Click that thumbs up if you like this video. Click the subscribe button to subscribe to my channel, and ring that notification bell to see anytime that my videos come out. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.